Test. Adjust the sound.
What?
Test. Adjust the sound.
Now it's recording on your channel.
Testing 1, 2, test.
Now it's recording on your channel.
Test 1, 2, 3. Test 1, 2, 3. Test 1, 2, 3. All right. All right, I think ready to get started. I'm going to share this link. Right. Let's get this set up. Ooh, 5 people watching? All right. We're getting some people up in here. Let's go. Let's go. Let's copy this. Let's get that going. What's your event? Markets. And okay, sir. You do that. Markets are on fire. Everything's burning. Let's get the glasses on. Gonna load up here. Start time 10:15, right? Let's go. Let's go. End time. Yeah, we'll do like an hour, right? 12 a.m. Can't do 11 p.m. Oh wait, there we go. Down here. Let's go, baby. Let's get that uploaded. For those that are here, thanks for joining. I'm gonna start this up. Let's go. Start event. It's going. I can't stream into Discord, right? No. Okay. Post it in the Discord. I just want to get more people up in here, you know. Let's go on Twitter. Just drop the link in there. I need to set something up where it just like spits it all out everywhere at once, right? I need to get this all set up. Markets in turmoil. Oh man, we're on fire. It's burning, people. Your iPad, sir? Alright, let's do it. Let's set you up here. We can't have it too loud, okay? Did I hear someone talking? Let me see. Make sure the live stream is going. All right, I think we're ready to get started here. Give it a couple minutes. Let's see. Anyone in the chat? Let me just. My kid's using the other screen right now, so I got one monitor to use.
We'll look at you.
All right. I need some space, man. Okay. Nessie's looking at me. All right, cool. Burning with yield. Billy, you're doing pretty good, huh? Earning that yield, man. This is the time. This is the time. So let me get this out of the way. Move that out of the way. So yeah, let's go over here. So yeah, I'm just gonna focus on Ethereum. You know, we're just gonna do a little quick stream here. You know, so I was looking at my positioning. Wait, what is it? Oh, is it playing? It's playing, that's why. Ha! There we go. I was like, I thought I heard myself talking. Man, I'm not good at this streaming stuff. But here we go, man. You know, last night we had the live stream last night. I think where were we last night? I mean, we were hanging around 3,600, right? Ethereum. And I said, you know, I mean, I'm not saying I predicted it, but I'm just saying like the way this market has been going since the top, controlled selling. You know, they're just selling it off. You know, nice and slow. They don't want to freak you out yet up here, because they want you to hold your position up here. so they can create a liquidity event wherever they want down here, right? Get people to capitulate, huge volume, that's where they'll step in, right? This slow grind down, this is like the grind of death. Now, people were pretty confident up here, you know? A lot of bulls, they're just sitting pretty, they're like, oh, it'll bounce back up. And that's what it's been doing, right? That's what's been working. But now, lots of them are trapped. Get up here, they're like, well, it looks like it's going to bounce back up. Slow grind down. Now, look at this drop here today. That's a pretty big drop. Trapped a lot of people. Now it's kind of like, oh shit. Well, maybe we'll bounce at 3,000, right? It's like, well, I'm so close to 3,000. Why am I going to sell here? Right? So the uncommitted are, you know, they're kind of thinking right now, right? It's just got them thinking. So but yeah, so I was looking at my concentrated liquidity pools, and specifically Ethereum. Where is it? Right here. My Ethereum pool. So I'm looking at this, and this one actually just rebalanced. And look at that, it's already printing some nice yield. It's a pretty tight pool. I mean, really not that tight, you know. Look at that, 29.48 to 35.51. I'm pretty much, my pool is now pretty much all Ethereum, right? I got some leeway to the downside, but I was thinking of running a recurring rebalance strategy here. I've been running the automated rebalance, and as you can see, look, I'll bring it up here. This whole time, you know, since we started this sequence over the past, it's been running for about 10 days now, right? Since the top of the Ethereum market, right? What was it, 4,050? I've been running USDC heavy concentrated liquidity pools. Anyone that's watching that's not part of the community, you could just, I don't have the link in this video, but you could look at my other videos and it'll have a link to the Discord. You could join the Discord and see, you could come to the concentrated liquidity trades and go to Ethereum USDC. It's free to see. I show it to everybody. So I've been running this strategy, USDC heavy on the way down, generating some yields. I've generated probably close to 10 grand worth of yield in 10 days, right? Started with 149,000. We're now at 125,000, right? I gotta, well, it's just compounding my yield. I gotta pull out about 2,500 out of here. So that would be about, we're about at 122,000 liquidity pool value, right? So, and I think it's coming, right? That major dump. You know, people are gonna start capitulating really soon, and you know, we've been straight up, man. So it's like we could get some killer wicks here, right? So I've been kind of thinking, like, should I run a automated rebalance strategy that just kind of just keeps my pool, my LP in range during the chaos? And this is what I kind of been thinking. I kind of been thinking this. So we go here to the recurring rebalance, right? We come here, and I'm going to run it on a ratio setting. And I want to keep it, you know, if we get down to 29.48, I will be 100% USDC. And I want to maintain close to that exposure, maybe 90% at the least, you know, exposed. So when it hits like 90% or lower, I want it to rebalance, or sorry, when it gets over 100%, because it'll get me out of range, I want it to rebalance to keep me in range, but not sell over 10% of that, right? So I want to stay 90% or above in Ethereum exposure and to stay in range, right? So I'm gonna try this out here, right? So we're gonna uncheck the below because I don't want to rebalance when the ratio gets low on this. Like, I want to have my own range set. I just want to play this for possible chaos tomorrow, right? We have the FOMC tomorrow. Should be a lot of volatility. So I'm looking at this, and here I got my slippage setting set. Now when we rebalance, I think I want to go with a ratio, right? I want to stay 90% Ethereum. So if the ratio gets above, I want to say 99.99%, which means I'm pretty much almost out of range to the downside because you're buying Ethereum on the way down in a liquidity pool. I want it to rebalance. So what is the current tick spacing? They need to have a if I want to do like a 1,000 tick spacing, what does that look like in price, right? You know, they need to do that. I made that request, so hopefully they're working on that. But what I do right now is I go here, I just go to the NFT. You can see the minimum tick, maximum tick, that's your range. And then you just do the difference, and that's your tick spacing, right? So 196, 430 minus 194, 570. So I have an 1,860 tick spacing right now. I think that's good. That would generate a lot of yield, but keep me... Ooh, if we do get a move up, I will have to... I don't want to sell off too much Ethereum, right? So maybe I could do... Gets below 70%. And that's an 1860 wide. Maybe I'll do like a 3,000 tick spacing, right? Give me some room. Like, you want to leave... I want to leave some room for error, right? Room for volatility, right? I don't know how big the volatility will be. And I want to ramp up these gas fees. My gas ceiling, right? So I just put like $4.50. That way it's for sure going to go through, right? I would rather spend $4 on gas and get my rebalance done quickly, right? Slippage, I'm going to keep it at 0.19. It's been like pretty good at rebalancing either at or below this slippage setting, which is incredible. You know, they tap into 1 inch, which is awesome. So I'm going to keep it there, right? I don't want to lose too much slippage, especially with something like this that might rebalance often. I don't want to lose too much to slippage, right? So, you know, that would just suck. It would cut into all your yield. Wouldn't make this strategy worth it, right? So these are things that you have to think about, like slippage, margin, giving yourself some buffer, right, for error. You don't want it too tight to where like you're giving yourself little margin for error, right? You want to give yourself some space. You know, let the volatility play out if it comes, and work that, right? So I'm thinking this right here, right? Keep it there, rebalance to 90% if any of these hit. If this goes below 70%, have a rebalance. Where is it at now? See, at this price, it's 73%. So maybe I'll do it a little less. Maybe at below 50%. And then maybe I'll widen it out even more. I don't want to go too wide, you know? Maybe 3,500. We'll do 3,500 tick spacing. And that should just kind of encompass it, right? So this whole time, Ethereum's been just like down only, right? Since the top. And I've pretty much I've rode it all the way down, right? I rode it all the way down, but I was constantly rebalancing, generating yields, right? So I want to generate yields on the way up. I've generated almost 10 grand worth of yield. I want to generate the same on the way up, but I want to minimize that impermanent loss, right? I actually want to eliminate it. I don't want to have any impermanent loss by the time we get back to 4,000. Whether that's next week or in a couple months, right? It doesn't matter. A couple months would be awesome because I would generate so much yield in that time that it would be amazing, right? Because by the time we get back to 4,000 at a price of 4,000, all that yield will be profit, right? So, okay, cool. And then that's pretty cool, man. So that's good to know. Kids talking to me. So where was I? Yeah, so that will be all profit if we get back to 4,000, which should be amazing, right? And for, like, say the person that bought the top at 4,000 and it's just holding the coins in their wallet, by the time they get back to 4,000, they'll be break even. And going through something like this, especially if it gets pretty deadly, we touch it. If we get a 2 handle on Ethereum, if they don't capitulate here, if they get back to break even, they're like, you know what, I'm out. You know, but as a liquidity provider, you're just gonna be like, yes, give me that yield. That fear in the market creates volume, right? Creates volatility, creates two-sided action, and they use your liquidity to enter and exit at a faster pace because of that volatility and that fear, right? So you're just sitting there generating yields, and that is your incentive to stay in the market. Now our job is to make sure that we're efficient with our rebalances, making sure we understand how we have to rebalance, and making sure to minimize that impermanent loss, or even eliminate it, or even go into a positive gain. Whereas if I would get back to 4,000, I can make money in just my liquidity pool. I'll be in a profit. And then you add the yield on top of that. That's even, that's great, right? That's amazing. And I've done that a few times. Posted it on my Twitter. Posted articles explaining every single trade with the NFTs, showing the price ranges, showing the yield, breaking it all down, comparing it to a hodler, and showing that you can beat a hodl strategy by using concentrated liquidity. It's very possible. I've shown it multiple times, and I think concentrated liquidity gets a bad stigma out there. People have a negative sentiment towards it, saying it doesn't work, there's something wrong with it, it's broken. If it was broken, it wouldn't last this long, right? It wouldn't still be a tool that's widely used today, right? I think more people are starting to wise up to it and starting to realize, whoa, wait, maybe there is something here, right? So very important if you want to get into this and learn it, right? Because this is like pretty much, because right now there's no option. There's an options market, right? But it's not liquid enough. And you can't hedge positions. Like, options is great for hedging, right? Like in traditional finance on the stock market, you could hedge your Apple, your Amazon, any stock with options and mitigate risk by doing that, right? You could use options in that way. In crypto, there's not a lot of liquidity, so it's not very efficient. The spreads are super wide. It's just not viable at all. The capital requirements, everything, it's just not worth it, right? So here you have concentrated liquidity, which allows you. A concentrated liquidity position is more like a short call with a short put, right? Like a covered call. Like you own the stock, or you, like, say in this case Ethereum, and you're selling covered calls against it, right? Selling calls against it while also shorting a put, right? So it's kind of like this it's like this bullish position that's capped to the upside, right? If you guys know options. But using concentrated liquidity, you can stay in the market at any, during uptrends, downtrends, sideways market, volatility. You can stay in as much as you want to, right? A couple of years ago, you couldn't do that. You had to either buy it and hold through the volatility with no incentives. Well, the incentives was probably just the growth, right? But I mean, you took some pain sitting through those dips, right? But now you have this tool to shield your position from getting too much delta exposure, right? Like, which means exposure to price. What I've been doing is I've been setting up liquidity pools that are USDC heavy, which means they're mainly all stable coins. And then as price dips into my range, it starts converting into Ethereum. And the wider you have it to the downside, the longer it takes for it to convert. So you're not exposed to all that volatility, right? Like if I had, this position started out with $149,000 in Ethereum, right? Or sorry, in USDC at 4,000 ETH. So I'm down about almost 30K, right? So, but if I bought Ethereum up at the top, right? 149,000 divided by 4,050, 36 ETH, and at a price of 3,075, I would be down even more right now if I just bought 149K of Ethereum, right? So if you think about it that way, you know, you kind of made 10, you saved 10 grand, right? 113K to 123, you saved 10K, right? But not only that, I've generated almost $10,000 in yields. So on the original 149K, that's about, I think like 6 or 7% in yield I've generated in around 10 days, just about 10 days, less than 10 days. Imagine if this goes on for a month, 2 months, right? 10 days, I'm making 7%. In a month, I'm making over 20%. 2 months, 40%, right? I make 40%, right? That's $60,000. Now if price stays right here at 3,070, I will be in a profit. I will have lowered my cost basis from $4,000 Ethereum to 3,000. Now, if you think of it in this mindset, if you're getting it here, it's all about a game of reducing your cost basis over time. Trying to time the market and sitting there, especially for those that don't trade, you know, this could be a really good option, right? You know, you're holding your bag of Ethereum, you want to generate some yield. You can use concentrated liquidity to do that. And over time, I mean, hell, like in a couple months, you could generate, you know, enough yield to, you know, reduce your cost basis from, what is it, 25%, right? So you got to think of it that way. Now imagine over the course of a year, these yields I'm generating right now they've been high, 300% APR, 400% APRs, sometimes 500% APRs. 5x your money in a year. You stick to it. That's why it's very important to stay in the market as a liquidity provider. Always stay in it because you're constantly generating that yield. You don't know when the volatility is going to hit. So anyone trying to time the volatility, it's a losing game, because the volatility hits like that, you're not prepared, or you're not ready, you're not there, you miss it, right? And you miss all that yield. If you're trying to time the volatility, you might as well not even try it. You might as well just trade the market, and that's fine, right? But for those that want a long-term position, want to generate these yields on their crypto over time, especially in this market, you could double your money at least in the course of a year, right? Depending how aggressive you are. If you're pretty aggressive, you can 3x, 4x, 5x your money on this, using this tool, right? Like this is, I mean, like, look, this LP like rebalanced probably like when we crossed through 3150, which was how long ago? I'll do a 5 minute, because I think it was really recent. 3150. It was up here. So at 9:30, right now it's 10:30. In 1 hour, I've generated $118 worth of yield in an hour, and that's because the volatility is so high. Like, this is what I look for. This is what I want, right? I mean, yes, riding the market up and away is cool, and that's what I did. I did it from was it in October? I think it was. Yeah, October, when we started having our run. Was it October? Wait, am I in the right chart? I am in the right chart, right? Or am I looking at it? Oh yeah, I was looking at the previous year. So here, yeah, this run here, I was spot long from 1500 and I rode it all the way up. I didn't do much farming. I leveraged my position by lending it out, borrowing USDC, and then farming altcoin liquidity pools with that loan. And then I was paying back the loan using that. So it was generating, sorry, it was generating an extra at least 8% a month, 10% a month in yields on that loan. And I was around 30 to 50% leverage or loan to value, right? So 50%, if I'm making 8% a month or say 10% a month on that loan and at a 50% borrow on my total capital, earning an extra 4% a month, right? You know, might not seem like a lot, but well, I mean, in crypto, it might not seem a lot, but 4% a month is pretty good, right? That's on top of the gains from Ethereum going from 1,500 to over 3,000, right? 4,000. So that's just another way you can play the market using concentrated liquidity. You know, I'm no longer borrow. I took off. I closed the loan out around 3,300, and I just felt it was getting heated. There was just a lot of risk. This thing has been straight up, so you know, I was just kind of closed it out and got more protective. Sold some Ethereum, and then just kind of I started chasing it on the way up here, farming USDC heavy pools, and now here we are, right? Let me see. Do we have any comments? Hello, just joined the private group this week. From Richard, and looking to set up the sushi swap LP for Ethereum USDC, printing a 348% APR. This one's on base. Oh yeah, didn't Felix post that? I think he posted that in the Discord. Just wondered how easy this is to do. And then I don't know, what does that say? Man, there's like a little thing. Oh, first time. Oh, it's your first time. Okay, yeah, first time. First thing I would suggest, jump in and do it, right? Learn it, but use a very small amount. Like, use 10% of what you would normally use of your normal size. Use 10%. Even if it's like $100, right? Fuck it, whatever. Like $1,000, you know, probably $1,000 just to kind of like really see it, because $100 will be tough to track because it'll just be moving in pennies, right? But like $1,000, right? And really learn the nuances of concentrated liquidity. Learn how to track your impermanent loss. Like, have an anchor. Like, I call it the anchor. It's your initial stake price. Like, say, like for me, I started this sequence at $4,000 Ethereum price, right? So that's my anchor. That's where I want to be, break even when price is at that level, right? So if as long as I have the anchor, I can always have that vision of like, okay, when I rebalance, I got to keep that in mind, right? Now, what's great about this Aperture Finance tool is that, like, see, I'm running very tight liquidity pools, right? I'm running very, very tight, right? Like 29.48 to 35.51. If this thing goes to 4K, of course I'll be out of range. I will have so much impermanent loss, right? But use this tool to keep you in the game, right? To keep you in range and to manage it so when price, if it gets back to 4,000, you're back to break even, right? So you always have that anchor in mind, like, okay, I'm aware of this, but I can farm in the meantime while Ethereum's at $3,000 or below. I can farm like really tight liquidity pools to generate high yields. And then whatever your strategy is, if you're like, okay, well, if price gets back above 3,400, I need to be cautious and now take in and put impermanent loss in the forefront as a priority, right? I need to now eliminate it, and I need to get have my liquidity pool set up so where I don't take on too much impermanent loss on the way back up, right? That's how you think, right? Whatever your strategy is, your trading strategy, right? You're just looking at price levels. You're like, okay, it's holding, like say it double bottoms here, bounces up, holds above, $3,600 for a couple hours, and then it's trading. And you're like, you know what? This might be a temporary bottom. Maybe we're gonna test 4K again. So let me set up my liquidity pools to, make sure that I'm taking on as least impermanent loss as possible on the way back to 4K if it happens. But then you have your contingency plan to the downside. And what's great about Aperture, I show here, you could set up 2 triggers. You could set up the trigger below, like if it goes below a certain price, and then you have an above the price trigger, right? An upper trigger. So you have 2 triggers. So you're covered either way, right? And that's how you gotta set it up. And then when that triggers, you set up the next one, and you plan it out, set up your next 2 triggers for the lower and upper ranges, and then you just keep going at it like that, right? And this tool like helps you sleep at night, right? Back in the day, I had to wake up multiple times a night, and that was just a pain in the ass, right? Like manually managing, right? Seeing that you're at a range at night and you're like, oh fuck, gotta run down to the computer, gotta turn it on, I gotta do the rebalances, and that's like at least a 30-minute ordeal, even if I had the triggers planned and the ranges pre-planned, because you gotta unstake it manually, and then you have to restake it, then you have to swap the crypto to get the right ratio at that range that you want. And then hopefully price doesn't move too much to where you can stake all of it. Because if it moves, the ratio changes, and then you're like, fuck. So you stake some of it, and you got to swap the remaining, and then get it in there, and then maybe you have a little bit left over, right? Or maybe you got to add some more money, right? And then that kind of throws off your strategy, right? Because you're adding more risk if you have to add more capital, right? Which, if you're not planning to do, that would just suck, right? So that's the great thing about Aperture Finance. It just does it all in a nanosecond without you, while you sleep, literally while you sleep, right? Like tonight, I was out, we're having some dinner, and then this thing rebalanced for me, right? It just did it for me. I was like, this is awesome, man. Now I could go back and plan out my next move. Oh, look at this. Arbitrum might be down right now, or you may have lost your network connection. Oh, I hope I didn't lose my network connection. Let me see. Am I still on here? I hope so. Hopefully. I don't know. Type in the chat if you see me. I should be still good. Okay. Let me just check my OBS real quick. Yeah, looks like we're connected. Looking good. All right, I think we're good. Probably just Arbitrum having some tech difficulties. Look at this, man. It went from 118 to 136, man. Like, that's what I'm talking about, man. This is what I look forward to. This is game time for me, right? People are freaking out. They're like, "Oh my God, what's going on? The market's crashing." But I'm like, dude, I love it because, first of all, I don't mind holding Ethereum, right? So like doing this on like a shitcoin would suck, right? Because you're like, oh shit, is this thing coming back? Yes, Richard. Yeah, just try it out, and type in the chat, the Discord, if you need help, man. We have other members that are pretty proficient in concentrated liquidity as well. So if it's not me helping, it'll be someone else helping, right? And just like, man, it's all about repetitions and just getting your hands dirty and just learning it, right? Making the mistakes early on, and then our community could guide you in the right direction, right? To really find the fixes quickly, right? See, when I started this, I made all the mistakes, but you don't have to. You don't have to make all the mistakes. I mean, there was a time in the beginning where I farmed for like months on end, thinking I'm like racking up some gains and everything, and then I exported everything out from APY Vision, and I ran the calculations, and I was literally like break even though I was printing like 200, 300% APRs on Ethereum. And you know, I'm like boasting to my wife, and I'm like, yeah, I'm making so much money. Yeah, you know, look at this, it's amazing. It's literally just printing, right? Like that's all. You just set it super tight and then let it be. If it goes out of range, fuck it, just rearrange it, right? You're just gonna print. And I learned a really bad mistake, man. You know, I learned that impermanent loss is it's that silent ninja. I always say is that silent ninja, right? That just every trade, it just nicks off just a little bit of that profit every time you rebalance if you're not tracking it, right? If you don't keep it at bay, it will steal your gains, man, and you won't notice it on a trade by trade basis, and most don't, and it sucks for them because they're not realizing, especially in the bull market. It's even harder to realize that you're taking on impermanent loss because everything is up only, right? Everything's moving up, so you're making gains on your liquidity pool, but you're limiting the gains that you can make and not realizing that, because in up only markets, it's like shit, as long as I see that number go up, right, it's all good. But no, like they're probably taking on a ton of impermanent loss and minimizing what they could have gained, right? The amount of money they're losing from the mistakes, right? So it's easier to find that out in a bear market and really track it and be like, oh, okay, so I'm making some mistakes here. And it's better to find that out early, right? So, but yeah, my suggestion is start doing it. Get involved. Start with a little bit of money. You know, yes, I know we're in the middle of a bull market, but fuck it. It's you don't want to make mistakes that are costly, right? You don't want to be, say, like doing what I'm doing, farming a concentrated liquidity pool from Ethereum 4,000 down to 3,000, and then the market reverses back to the upside. You have a tight range, it blows you out of your range, and you're sitting there like a deer in headlights as the market will scream higher with no pullback, and you're like stuck there sitting there like, what do I do? Oh shit, now it's at 4,000 and I've just locked in a 20% loss and it's back to my original stake price. See, that's what you want to avoid, right? Because you know, crypto, man, this thing can move fast. You know, it can move fast and it can be brutal. The moves can be brutal and it can move farther than you can think, right? So that's my advice though. Start small, you know, learn the ropes and learn it, you know, do it as often as much as possible, right? Even with $1,000 or $100, whatever you want to use, farm your pools very tight, right? So you get more rebalances under your belt, right? The training, you get more of that training, because if you keep them too wide, you're gonna have to wait a long time, right, for it to hit your trigger to rebalance, right? You want to do it super tight, and that way it forces you to rebalance, and you could think about your rebalance constantly. What's your next move? You know, okay, it rebalance. What do I do next? What do I do next, right? And then you get more repetitions in a shorter period of time, right? And you just keep doing it and doing it and doing it and doing it. And then when you're ready, when you understand it, because once it clicks in your head, you're gonna be like, holy shit, this thing it's actually pretty easy. You know, it's really easy once you understand it, right? But just most people are coming from like a trading background and don't have much options experience. So there's a learning curve, right? But once you get it and understand it, you're like, holy shit, it's actually not that hard to understand. But once you get it and it clicks, then you can run some wide pools depending on your personality, right? Your risk profile, how much time you have to dedicate to this, right? That all plays a factor in how wide of a range you go, right? The tighter you go, obviously the more management it needs, but you could make a ton more yield, right? So you got to find that happy medium. Like for me, I don't like this here is actually pretty tight for me. 29.48 to 35.51. That's pretty tight for me. But I know some people that go like $100 wide, but they're there like you know, they got no family. They're just like focused on this, right? Like I don't have that luxury, right? I just don't want to sit at the desk for long periods of time just watching, right? Like, you know, I want to kind of live my life too, right? So that's kind of like the happy medium balance for me, right? So that's where that comes in too, right? Like, if anyone looks at my YouTube videos, like I have this video, yeah, I'll just pull it up right now. I have this video where I talk about, where is it? Right here, this one right here. I'll post it in the chat. The link. I call it I call a person's strategy a tailored suit, right? Tailored suit. And the reason why I call it, you know, a person's individual trading strategy is like a tailored suit, right? Like I said, you're fine tuning it, you're tailoring it to the time you have available, how much risk you want to take, your personality, right? It all plays a factor. Your lifestyle plays a factor in how you trade the markets. So over time, you tailor this suit of a trading strategy that fits you. And then that's why, like, you know, when I see people that says, oh man, my trading strategy is on point. I'm always, you know, I can nail trades. I could cut risk fast, right? I'm doing this and it's working. You should try it. That's like them taking off that tailored suit and giving it to me and me putting it on. And obviously I'm a different person, so it's not going to fit me. It might be the perfect suit for them, but it's not going to be perfect on you, right? It's just going to be too short, too long, right? It's not going to be able to button up, or it's going to be just too baggy, right? Like, it just depends who you are, right? In trading, that's how you have to think about it. Like, your investing strategy. It has to be tailored to you. Like, there's no other way around it. You can't take someone's exact strategy, and put it on, right? Now, it's okay to take ideas from different strategies and then Frankenstein something together and then tailor that, right? And then hone it and develop it, right? To fit you. And that's regardless if you're like a day trader, a swing trader, or even a long-term investor, right? Like, it has to fit you, because if it doesn't, you're not going to have conviction in your trades, right? You're going to get emotional. Like this here, for someone that doesn't have a plan, say that followed me up here and was like, oh yeah, I'm gonna print some yield too, right? Say someone that's new, they jump in here with me, but they don't have a plan, or they don't understand. They're too new, and they're not fathoming what is possible on the negative side, right? They're just like, man, this thing's been up only. I'm gonna generate some yields and just scalp out some yields. But then you get this. Now the person's upside down. What are they gonna do? They're probably sitting there like, oh my God, I dropped 200K into this liquidity pool. Now I'm down, 20% on this, right? Well, I'm down 40K on my position. Oh, this shit doesn't work, right? I'm out. They bounce, right? Like, it just will happen. They will eventually get to the point of max pain. And I don't even think we're at that. On this sequence, I don't think we're at max pain yet. I think we're going lower, right? And I'm prepared for that. I don't mind holding Ethereum down here because I have the long-term game in mind, right? I'm pumping out those yields. If this drawdown and if it just goes sideways for the next 6 months, I would be happy, because you could just imagine the amount of yields I can generate. I generated 6 to 7% over the course of 10 days, not even 10 days. So imagine over 6 months, right? Lowering that cost basis, right? So yeah. So I think what time is it? It's already 10:30. How long have we been on stream here? Been on for a minute, huh? So but yeah, like, if you guys got any questions, you post in the chat. I'll be happy to answer them. Let's see, we got 6 people watching. Yeah, about 40 minutes ago. So like, you guys got anything? If not, you know, just kind of like, that's what I was looking at, you know, just kind of going back to the strategy I'm looking at. I've been using the automated rebalance, which is this right here. But now that I'm at kind of like pretty much a full bag of Ethereum, I'm thinking about running a recurring rebalance strategy that keeps my Ethereum at or above 90%, right? So I'm gonna post it in my Discord, you know. I'll post a link in the description of my Discord or the YouTube channel for anyone that's watching this later. I'll post the link to my Discord. It's free to join, and you'll be able to see the trades for free, right? You can see this whole sequence. You just come to when you join up, you come to this Concentrated Liquidity Trades category, and then you just go to the Ethereum USDC, and I have all the trades there. And I'll have my next plan, of what I'm gonna do. So I gotta go crunch some numbers, and then man, it's almost shit. It's getting late, man. Time for bed. All right, guys. Hopefully that helped. Let me see. Well, oh, I got some questions here. I didn't see these. I love your streaming on YouTube, Nima. Yeah, I remember seeing your posts in the Discord. Thanks for joining. Are there still good options for borrowing against our coins? On Aave and others, the borrow rate, oh yeah, borrows are high, man. And you know why they're high? Because everyone's super bullish, man. Everyone's super bullish. Everyone's borrowing the stable coins and leveraging up, right? They're leveraging up, just buying more crypto with the coins. Because this is how it works. Near the bottom, when things are at the bottom, you're going to see those rates come down. And then that's when you know, okay, maybe it's time to start putting on some risk, right? And that could be like it's not like an exact science, right? But you could use that as part of a sign of like, okay, we might be getting close to the bottom here. Maybe it's time to put on some risk, right? And that's what I'm looking for. But yeah, is there any other options, right? And honestly, like for me, especially like throughout the bear market, 2022, 2023, I just stuck to Uniswap and Aave because there was, I don't know if you were around during those times, but there were so many exploits, so many hacks, rugs, right? Like, I was just like, man, like, I was just thinking like, you know, people say, oh, you should diversify your crypto so you don't, like, if one goes down, you're not taking a huge hit. But I'm just thinking in a way like, well, if I'm going to do that, like, how much would I put in a brand new platform that just launched, right? Like, how much would I put in there, and would it be worth my time to manage that, right? Like, and I was just thinking like, probably not. And then not only that, my attention and focus gets split up between different platforms and managing and remembering where things are and what I'm doing. Like, I see it way too often in crypto, man. Like, I see people like overextending themselves in 20 different positions on 20 different platforms. I'm like, dude, like, how do you even manage that? Like, I mean, you know, maybe there's people out, I'm sure there's people out there that are just big brain, giga brains that can do it, right? But for me, I was like, you know what? I'm better off just focusing and staying on Uniswap and just farming and getting really good at this one thing, concentrated liquidity, and just ramping up these yields, right? But to answer your question, like, for me, like, if if the yields are too high for Aave, I just don't borrow, and I'm just like, you know what? I'm just not gonna borrow. I'll wait till the yields come down, or the rates come down, or I can find an opportunity that can outpace the cost of that, which you usually can, especially in this market. You know, you could find some high yield opportunities. But yeah, that's how I would take it, man. Like, I don't know, man. Like, there's no other. For me, I wouldn't go beyond Aave. It's just, you know, especially lending platforms. Like, they're the ones that get hit the most, right? Them and bridges. It's just like, yeah, I'm good. I'll just farm my spot position, and then when the rates are good, I'll borrow. You know, so that's kind of like my take on that. Let's see. So yeah, that's about it, guys. I think I'm gonna keep it short here. Gonna end it. You know, I know it was impromptu, but yeah, you guys take care. If you have any questions, we could continue in the Discord. But yeah, I'm gonna run some numbers now, and then I'll see you guys on the next one. Peace.